this Canadian underdog be the next Shopify, or is it a tech trap in disguise? Today, we are breaking down one of Canada's most misunderstood tech stories, Lightspeed Commerce, ticker symbol LSPD. Now, this is a company that helps small businesses, think restaurants, retail stores, and hotels, manage everything from payments to sales and operations in a single platform. After going public in 2019, the stock shot up like crazy and then crashed over 80%. Now the management says that a turnaround has begun. They're cutting costs, generating more cash, and expanding payments. So, can this company actually rise from the ashes? Let's take a look. Before we begin, please note this is not financial advice. This is just one investor sharing his perspective and views on Lightspeed Commerce. Please do your own research before investing. Now, let's talk about the business model. Imagine that you own a coffee shop. You've got one system for tracking sales, another for managing inventory, and another for taking card payments. It's a headache. So what Lightspeed does is that its platform puts together all of this in one place. Think of it like, a single system for your business. They sell software subscription that helps store owners manage sales, also called point of sales or POS systems, employees, customers, and inventory. Now, that's the software part. It's a recurring monthly revenue. But Lightspeed also makes money from payments. Every time a customer buys coffee and swipes their card, then Lightspeed takes a small cut of that sale. This is called take rate, basically a percentage that they earn from every transaction. Now there's also hardware sales, right? Think of cash registers, card readers, and services like onboarding and customer support. So in short, Lightspeed has multiple revenue streams. They have the software subscription, which is more recurring and stable in nature. Then of course there is the payments systems, which is growing really fast in the past few years. And then there's the hardware and other services, which are smaller, but they are supportive. Let's talk about the key risks and challenges for Lightspeed. The first is competition, right? They are fighting against giants like Block, like Toast, like Shopify. They all play in a very similar space. Now, these companies have deeper pockets and brand recognition. The second is adoption speed. Lightspeed is still convincing existing customers to switch to its own Lightspeed payment system. That's where the profits really are. And so if merchants don't adopt quickly, margins can stay low. Third is complexity. They grew fast by buying many companies. Now they're merging all those platforms together. And integration takes time, and mistakes can hurt customer experience. And finally, an economic slowdown. Most of Lightspeed's customers are small local businesses. If consumers spend less, those shops make fewer sales, and Lightspeed's payments revenue dips. In short, the company's future depends on scaling payments, improving margins, and keeping merchants happy. Here are a few things to track if you are interested in this stock. The first is average revenue per user. It shows how much money Lightspeed makes from each merchant. If it's going up, it means that merchants are using more features or more payments volume. The second is gross transaction volume. That's the total dollar amount of sales processed through Lightspeed stores. Think of it as the total sales of all their customers combined. Higher the gross total volume means merchants are busy and Lightspeed earns more. The third is gross payment volume. Now, that's a portion of the gross transaction volume where Lightspeed handles the payments itself. This is crucial because GPV, or gross payment volume, drives the high margin payments business. Recently, gross payments volume has been growing much faster than the total transaction volume. And that is a really good sign because it means that more merchants are switching to Lightspeed payments. And of course, you need to keep an eye on the free cash flows of the company. Positive free cash flows means that the business can continue to grow without raising more money. And in the latest quarter, Lightspeed has actually turned a corner when it comes to cash flows. So let's take a look at the quick valuation. Lightspeed's gross margins are around 42 to 45%, similar to other software plus payments companies. No, today its free cash flow margin has just broken even. In the latest quarter, they've generated a slight amount of free cash flows. Now, if we look at mature peers like Block or Shopify, generally speaking, for a company that has a gross margin close to 40 to 45%, they can do free cash flow margins close to 10 to 15%. So if Lightspeed follows that path, it could reach about a 10% free cash flow margins by 2028. Let's run a quick back of the envelope map. Lightspeed management has guided for about 12% revenue growth in fiscal 2026. Let's assume that the company continues to grow at about 10 to 12% growth over the next 3 years. That would bring the revenue in 2028 closer to about $1.6 billion. Let's round it down to $1.5 billion. Now, with the 10% free cash flow margins, that's roughly $150 million in free cash flows. Applying a multiple of about 20 times, that brings the potential market cap in 2028 to about $3 billion. Compare that with the current market cap, which is about $1.7 billion. That's almost an 80 to 90% growth over the next 3 years, which would definitely beat the market. However, if the stock market is not doing great, and let's say Lightspeed only gets a multiple of 10, in that case, the market cap would be about $1.5 million, which would mean that there'd be absolutely no gain in the next 3 years. But that's a bear case scenario, of course. In a base case, let's say Lightspeed gets a multiple of 15, in which case the market cap would be about $2.2 billion, which is, again, a very modest 40 odd percent gain over the current market cap. So, depending on the execution, there's potential upside, but also there is risks if they fall short. And more than that, it also depends on how the stock market performs over the next 3 years. So, in conclusion, Lightspeed Commerce is no longer just a struggling software company. It's transforming into a full stack commerce platform with every tap, swipe, and sale flows through its systems. But turnarounds take time. If they keep growing payments, boost cash flows, and simplify their operations, this could quietly become one of Canada's tech comeback stories. For now, keep your eyes on average revenue per user, the gross transaction volume, the gross payments volume, and free cash flows. Those numbers will tell you whether Lightspeed's lights are shining brighter or if they are fading out. If you like this video, please do hit that like button. What do you think about Lightspeed? Do you think this company is turning around or not? Please do mention that in the comment section below. And please do subscribe for more such educational videos. Thank you so much and see you next time.